What's up, everyone? Welcome back to the channel. Today we're diving into a topic that's crucial for anyone in the crypto space. Is peer-to-peer, P2P crypto trading safe? If you've been around crypto for a while, you've probably heard about P2P trading. Maybe you've even tried it yourself. But with all the hype, there's still a lot of confusion and concern about how safe it really is. In this video, we're going to break it all down. We'll cover what P2P trading is, the risks involved, how to protect yourself, and whether it's a good option for your trading strategy. If you're considering jumping into P2P or just want to understand it better, stick around because we're about to get into the nitty-gritty. And hey, if you find this content valuable, make sure to smash that like button and hit subscribe so you never miss an update. Let's get into it. All right, first things first. What exactly is P2P crypto trading? Simply put, peer-to-peer trading allows you to buy and sell cryptocurrencies directly with another person without going through a centralized exchange. Instead of relying on a middleman like Binance or Coinbase, you're dealing directly with the buyer or seller. Now, why would anyone want to do that? Well, there are a few reasons. For one, P2P trading often offers more flexibility. You can negotiate prices, choose your payment method, and even work out deals that aren't possible on traditional exchanges. Plus, for people in countries with strict regulations or limited access to crypto exchanges, P2P is sometimes the only way to get in on the action. But with all that freedom comes some serious risks, and that's what we're going to talk about next. So let's get real about the risks involved in P2P trading. While it offers some big advantages, it also comes with potential pitfalls that you need to be aware of. Here are the major ones. Scams and fraud. This is the big one. When you're dealing directly with another person, there's always the risk that they might not be who they say they are. You could send your crypto or fiat currency, and the other party could simply vanish. Scams like fake payment confirmations, phishing attacks, and chargeback fraud are common in the P2P space. Lack of regulation. Unlike centralized exchanges, which are subject to regulations and audits, P2P platforms often operate in a legal gray area. If something goes wrong, there's usually no one to turn to for help. This lack of oversight can make P2P trading feel like the Wild West of crypto. Privacy concerns. While P2P trading can offer more privacy than using a centralized exchange, it's not always anonymous. Many P2P platforms require KYC, Know Your Customer, verification, which means you're sharing personal information with the platform and possibly with the other party. There's also the risk of your transaction details being exposed, which could make you a target for hacks or scams. Security risks. When you're trading P2P, you're often responsible for securing your own transactions. This means making sure you're using a secure connection, protecting your wallet's private keys, and being cautious about the information you share. If you're not careful, you could end up losing your funds. Market risks. P2P trading often happens in less liquid markets, which can lead to price volatility and slippage. You might agree on a price, only to find that the market has moved by the time the transaction is completed. This can result in unexpected losses or missed opportunities. These risks might sound scary, but don't worry, there are ways to protect yourself and trade safely. Let's dive into how you can do just that. All right, now that we've covered the risks, let's talk about how you can trade safely on P2P platforms. Whether you're a seasoned trader or just getting started, these tips will help you minimize the risks and make the most of your P2P trading experience. Choose a reputable platform. The first step is to use a trustworthy P2P platform. Some of the most popular ones include Binance P2P, Paxful, and Local Bitcoins. These platforms have built-in security features like escrow services, which hold the funds in a secure account until both parties confirm the transaction is complete. This can protect you from scams and fraud. Check the reputation of your trading partner. Most P2P platforms have a reputation or rating system that lets you see how other users have rated their experience with a particular trader. Always choose a trading partner with a high rating and plenty of positive feedback. Avoid dealing with new or unverified users unless you're absolutely sure they're trustworthy. Use escrow services. Always, and I mean always, use an escrow service when trading on P2P platforms. Escrow acts as a neutral third party that holds the funds until both parties have fulfilled their end of the deal. This is your best protection against getting scammed. Are you looking to secure your cryptocurrency investments? Meet Ledger, the ultimate solution for protecting your digital assets. Ledger offers top-tier hardware wallets designed to keep your crypto safe from online threats. With products like the Ledger Nano S Plus, Nano X, and the new Ledger Stacks, you can store your private keys offline, ensuring they are out of reach from hackers. Unlike hot wallets, which are connected to the internet and susceptible to hacks, Ledger hardware wallets provide cold storage, keeping your private keys offline. This makes them immune to online attacks. Paired with the Ledger Live app, managing your crypto has never been easier. Buy, exchange, and grow your assets all in one secure place. The app supports over 5,000 coins and tokens, making it versatile for any crypto enthusiast. Whether you're just starting with crypto or are a seasoned investor, Ledger has a device for you. The Ledger Nano S Plus is perfect for beginners, while the Nano X offers Bluetooth connectivity for on-the-go use. For the ultimate in security and customization, check out the Ledger Stacks with its advanced e-ink touchscreen. Ready to take control of your crypto security? Click the link in the description to get your Ledger hardware wallet today and join the millions of users who trust Ledger for their digital asset protection. Communicate clearly. Make sure you're clear about the terms of the trade before you begin. Confirm the price, payment method, and any other details in writing. If possible, use the platform's built-in messaging system to keep a record of your communication. This can be crucial if there's a dispute later on. Stay safe. Online. When conducting P2P trades, make sure you're using a secure internet connection. Avoid public Wi-Fi. Use two-factor authentication, 2FA, on your accounts, and be cautious about phishing attempts. If something feels off, don't proceed with the trade. Understand local laws. P2P trading might be more or less regulated depending on where you live. Make sure you understand the legal implications of your trades, especially if you're dealing with large sums of money. In some countries, P2P trading is restricted or even illegal, so do your homework. Don't rush. Scammers often try to pressure you into making quick decisions. Take your time to verify everything before finalizing a trade. If something feels off, trust your gut and back out. It's better to lose a trade than to lose your funds. By following these steps, you can significantly reduce your risks and trade with confidence. But remember, no system is foolproof. Always stay vigilant. Now, despite the risks, there are some serious advantages to P2P trading that make it worth considering. Let's take a look at why some traders prefer P2P over traditional exchanges. More privacy. While it's true that some P2P platforms require KYC, you can often find ways to trade with less oversight than you'd face on a centralized exchange. This can be particularly appealing if you're privacy conscious or live in a region with restrictive regulations. Access to multiple payment methods. P2P platforms typically support a wide range of payment methods, from bank transfers and PayPal to cash in person and even gift cards. This flexibility can be a game changer if you're looking to trade with unconventional payment options. Better rates. Because you're dealing directly with other users, you can sometimes negotiate better rates than you'd get on an exchange. Plus, You can avoid exchange fees, which can add up over time. Global reach. P2P platforms allow you to trade with people all over the world. This can be especially useful if you're trying to access specific markets or take advantage of price differences across regions. Control over the trade. With P2P trading, you have more control over the terms of the trade. You can set your own prices, choose who you trade with, and even decide how the trade is conducted. This level of control is appealing for many traders who want to customize their trading experience. These advantages make P2P trading an attractive option, especially for those who are comfortable managing their own security and want more control over their trades. So, after weighing the risks and rewards, you might be wondering, is P2P trading right for you? The answer depends on your personal circumstances and risk tolerance. If you're someone who values privacy, needs access to diverse payment methods, or wants more control over your trades, P2P could be a great fit. It's also a good option if you're in a region with limited access to traditional exchanges, or if you're looking to take advantage of market inefficiencies. However, if you're new to crypto, uncomfortable with managing your own security, or simply want the peace of mind that comes with using a well-regulated exchange, you might want to stick with traditional platforms, at least until you're more experienced. P trading isn't for everyone, but for those who understand the risks and take the necessary precautions, it can be a powerful tool in your trading arsenal. All right, there you have it. A deep dive into the world of peer-to-peer crypto trading. Is it safe? The answer is, it can be, but only if you're smart about it. By understanding the risks, choosing the right platform, and following best practices, you can trade P2P with confidence and take advantage of the unique benefits it offers. If you found this video helpful, don't forget to hit that like button and subscribe to the channel for more crypto insights, tips, and analysis. And hey, drop a comment below. Are you a fan of P2P trading, or do you prefer sticking to the big exchanges? I'd love to hear your thoughts. Until next time, stay safe, stay informed, and keep stacking those gains. Peace. If you haven't already done so, visit our website. You will find the link in the description.